Hello, good day, guys. My name is Nick, technical analyst of SuperForex. Today, we shall be looking at the technical analysis on the currency pair, the United States dollars to the Japanese yen. And as usual, we will be talking about fundamental analysis first before we move right down ahead to technical analysis, which is purely what we're going to be seeing on the chart. And fundamentals, we have noticed that the US dollars edged lower in early European trade Tuesday, but has remained near a 20-year high as traders prepared for the latest Federal Reserve meeting in the wake of a red-hot US inflation report. At about 3 a.m. Eastern Time, the dollar index, which tracks the greenback against the basket of 6 other currencies, traded 0.1% lower at 104.890, having climbed to a 2-decade peak of 185.29 on Monday. Now, some rebound in risk assets over the coming days is possible, given how fast risk assets have dropped in the past few sessions. And the dollar might, of course, face a correction soon. But at the same time, I think the FOMC rate announcement on Wednesday will prove mostly supportive for the greenback. Now, some analysts are thinking that the dollar's recent gains following the release of Friday's May US Consumer Price Index, which soared to a new 4-decade high of about 8.6% on the year and caused traders to price in more aggressive rate hikes as the Federal Reserve struggles to cope with unexpectedly hot inflation reading. Now, the market's reaction will be primarily driven by any clues about a potential declaration in tightening in September, both through the updated dot plot projections and in Chair's Jerome Powell's press conference in guarded. Now, the prospect of more hikes by the Federal Reserve in the near future has resulted in the 2-year Treasury yield climbing strongly to currently stand at 3.3091%. The 10-year yield is below that at 3.3050%, an inversion that is usually seen as a sign of an upcoming recession. Now, we have noticed that the United States dollar Japanese yen has rose about 0.1% at 134.59 after hitting a 24-year low of 135.22 on Monday. Now, the Bank of Japan has expanded, of course, a round of bond purchases earlier Tuesday to keep the 10-year government bond yield near its 0.25% cap to try and boost the struggling economy. The yen is the worst performing major currency this year and has been down around 14% as the Bank of Japan keeps rates low while the US yields surge and bets for continued Federal Reserve hikes. And what to expect from this actually? We are looking at USD JPY intraday pressure with our pivot to be at 135.20, and our preference would be short positions below 135.20 with our target headed to 134.00 and 133.70 in extension. While alternative scenarios could mean that above 135.20, we could look for further upside with 135.50 and 135.80 as targets. Now, our RSI, of course, is showing a downward momentum gradually, which of course, if we do this, it could most likely reach out to this most recent resistance via support zone at 0.748. Now, if we were to make this trade run up to this point, we're looking at nothing less than 300 pips with a lot of extension from this. And that's our technical analysis on today's currency pair, the United States dollar to the Japanese yen. Now let's move over to the stock markets. Now, today on the stock market, we'll be having a look at Intel. And we have noticed that Intel has paused hiring in PC chip unit for 2 weeks. And it's trying to cut costs by putting on hold the hiring of new employees in the PC and the laptop chip division. And a memo sent to the division of Intel employees on Wednesday said that the company, last week Wednesday, that the company is pausing all hiring and placing all job requisitions on hold. And we believe we are at the beginning of a long-term growth cycle across the semiconductor industry, and we have the right strategy in place, an Intel representative said in a statement. And this, of course, has increased our focus and prioritization in our spending and will help us weather macroeconomic uncertainty, execute on our strategy, and meet our commitments to customers, shareholders, and employees alike. The memo also said that all the job offers processed so far will be honored and that hiring for some of the candidates could continue as soon as 2 weeks from now. Intel has been investing heavily in trying to compete with the Taiwan semiconductor manufacturing company, TSM. Now, what to understand from this basically is that it has been showing a dig on the market. fall right from this point at the 42.03 zone, right down to 37.607 zone. And this, of course, is most likely going to continue if there's not a turnaround in the improvement of these sanctions and these queries being put for the Intel commodity. So if we were to have a trade entry on this, checking out on our 4 hours time frame, all we should expect is a deep free fall, more of a free fall from this zone down more, or maybe checking on the daily time frame will be better to have a clearer view, and at least one more extended candle to the 37, 36 zones thereabout, which could mean nothing less than 200 pips from that entry point, which is good money, of course. So that's our technical analysis on today's stock market. Intel, I remain your host, Nick. Bye for now.